morning, everyone, and welcome to How to Kickstart Your Forex Trading Using Binary Options and Spreads. My name is Gail Mercer, and I will be your hostess this morning. Now, before we get started, I would like everyone to take just a few seconds to read over the Nadex risk disclaimer. This is for your protection as well as for ours. And basically, you should always remember that any type of trading, including binary options and spreads, can involve risk. And that means you can lose money, okay? Now, for those of you that do not know me, my name is Gail Mercer, and I have over 15 years of trading experience. I started out with a company that programmed indicators and really just fell in love with the price bar. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor for Stocks and Commodities magazines, Traders World, and Top Shelf. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options Using Currencies, Trading Nadex Binary Options, Keeping It Simple Strategies, as well as the New Trader's Guide to Trading Nadex Binary Options and Spreads. Now, today's agenda is to explore the differences in Forex versus other markets, to learn the differences between binary options and spreads, identify the hours that Forex moves, as well as understanding market reports and their effect on the markets. Now, Forex is the largest market in the world. There is no central exchange, and that means when you're looking at volume, you're not looking at true volume, but you're looking at tick count. Now, it is a 23-hour market. It runs from 6 p.m. to 5:15, Sunday to Friday. Now, you do have different market openings around the world. You have Australia, Asia, Germany, London, and of course the U.S. These are the major market openings. Now, here's the differences between binary options and spreads. The binary options, you always have a maximum payout of $100. They are often referred to as all or none. Now, that simply means that the payout, the maximum payout, is totally dependent on the expiration value unless you exit early. Now, some binary options do not allow you to exit early. Nadex does, and this is a big difference. Now, on the spreads, your actual risk or profit is actually determined by the expiration value. All the spreads consist of a floor and a ceiling. The floor price is always on the left. The ceiling is always on the right. Now, this is a typical binary option, and on this one, you'll actually see that the premium is on the right-hand side of the screen, okay? So, for example, if you believe that the euro-US dollar is going to be less than 17.82 by 9 a.m., you could sell this binary option. Okay, this number right here, when you sell, represents your potential profit. Your risk would be 100 minus this value, which is approximately $55. Now, on the long side, let's say that you believe the euro-US dollar would be above 17.82. Then this number will represent your risk, and your potential profit would be 100 minus this value. Basically, it's about $50. Okay, that's on the binary side. Now, this number right here is called your strike, and it is what you are basically trading. In other words, by 9 o'clock, will price be either above or below this number? Okay, does everybody understand that? Now, on the spreads, it's not all or nothing, okay? It can be variable. So on this one, these are the spreads that were available at 9 a.m. expiration on the euro dollar. This is the floor price, and this is the ceiling price, okay? Now, if you believe that the euro dollar would go up in value, then you would look at the floor price, okay? And in this case, 1780 is the one that is closest to the current price. So basically you have a floor about right here. Now to enter this spread, you would pay the offer price, which is 1788. Now, what is your maximum payout? That's determined by the ceiling price, okay? So if, for example, this were to expire, let's say at 1881, okay, your maximum profit would have been realized. Do you understand that? Because this is what's going to limit the profit side. So if you subtract the ceiling, which was 1880, from the offer, which was 1788, that would give you your maximum profit, okay? Does everybody understand that? Basically about $92, okay? Now, let's say on the flip side, you thought that it would go down. In that case, you would look for a ceiling that is closest to price. In this case, it would be the 1780. Okay? Again, this would be your ceiling, and the floor at 1680, which is way down here, would limit your profit potential. Now, unlike the binaries, which are considered to be all or none, with the spread, it's where it expires, okay? The expiration value is going to determine what your profit or actual loss is. For example, if you wanted to short this, then you're looking at the bid price, okay? The bid price was 1.1774, okay? Now, this is your ceiling price, which is 1780. Now, what that does is that means that you have a total of $6 of risk. Okay? Now, the 1780 is going to limit your risk. You cannot lose more than up to the difference between 1780 and your entry price. So even if price expires at 1800, the ceiling is what's limiting your risk. Does everybody understand that? So if it moved all the way up to 1800, you would still only lose $6. Okay, but let's say the expiration value was 1776. Okay, in that case, you've actually lost $4. Does everybody understand that one? Now, what about profit? Well, this number right here, which is the floor, is going to cap your profit, okay? But let's say that it comes down to 1770, and this is the expiration value, okay? Then you have made the difference between your entry price, which was 1774, and the expiration value, which was $17.70, so you made $4 in profit. What if it goes down to $1,600? Okay, let's say the expiration value was $1,600. In that case, this number right here is capping your profit. So it's not minus 1,600, it would be minus 1,680. Does everybody understand that? So it fluctuates according to what the value is at expiration. Any questions on that? And this is the difference between the binaries and the spreads. The binaries are fixed. You're either going to make the maximum payout at expiration, and this is presuming that you do not exit early. Either you're going to make the maximum payout or you're going to lose what you paid on entry. But on the spreads, it's not like that. You know, you could go in with $10 of risk, but actually only lose $2, or you could actually make the full width of the spread, depending on how the market moves. Okay? And sometimes when you're looking at it from a risk to reward ratio, the spread is going to give you the better risk to reward ratio. Okay? Now, when do you use the spread versus the binary? Well, spreads are really good when you're expecting volatility, okay? The binaries would be better, you know, if you have a very slow moving market. If you have a fast moving market and you're using out of the money binaries, they can be really good because, again, it is the value at expiration that matters for the payout. Sometimes if you're really confident that you're going to get a good move, you might use both, okay? Now, when does Forex move? Well, it depends on the currency that you're trading. For example, Australia opens at 5 p.m. New York time, okay? Then the binaries kick in at 6 p.m. Well, you could trade the Aussie dollar or you could trade the Aussie yen. Then Asia opens at 8 p.m. You could trade the Aussie yen, the Euro yen, the British pound yen, or the USD JPY. Then Germany opens at 2 a.m. So then you have the Euro dollar, Euro yen, USD Swiss franc, British pound dollar, the Euro British pound, and the British pound yen. London opens at 3 a.m. So then you get an extra opening between the German and the London openings. And then, of course, the cash market for the U.S. opens at 8 a.m. Now, you could trade any of the dollar-based currencies during the U.S. Open. And there are times that I will even trade the Euro British pound because you can get some really low-risk binaries because the Euro British pound doesn't typically move a lot, okay? So there are times where I will even pick one that is kind of off hours just because I know it's going to be a slow market, but I know the direction that it's most likely to move, okay? Now, what market reports affect the Forex? Well, it depends on which currency you're actually trading. For example, on the Aussie currencies, you've got the retail sales, the trade balance, the employment change, the unemployment rate, the cash rate, and the RBA rate statement. All of these will create volatility in any of the Aussie Forex currencies, more likely than not, okay? On the British pound, there's an abundance of market reports that can create volatility. It's the manufacturing PMI, the construction PMI, the services PMI, the manufacturing production, the CPI, the average earnings index, prime minister speeches, Bank of England speeches. You've got the retail sales, the preliminary GDP, the Bank of England inflation report, the bank rate votes, the monetary policy summary, the official bank rate, the second estimate GDP, and of course the Brexit talks will currently affect the British pound as well. On the CAD, you have the employment change, the trade balance, the unemployment rate, the Bank of Canada monetary policy report, Bank of Canada rate statement, the overnight rate, the Bank of Canada press conference, manufacturing sales, CPI, core retail sales, GDP, and the Bank of Canada governor's speeches. Now, in addition to that, watch the crude oil inventory report. Typically, that is released every Wednesday at 10:30. Now, this is one of the weeks because we had a holiday on Monday that it will be released tomorrow instead of today. Now, for those of you that are not familiar with the USD CAD, it has a correlation with crude, and it's called a negative correlation. And the reason it's called a negative correlation is typically when crude is going up, the USD CAD will be going down. Again, that's typical. One of the things that you have to be aware of when you're trading that correlation is on Wednesdays, about once a month, this Bank of Canada monetary policy report and rate statement will come out. When this comes out, you never trade that correlation. And the reason is this will overtake that correlation, okay? It really neutralizes the correlation, and instead what you're trading is this instead, okay? Now, on the euro, you do have the ECB president's speeches, the euro minimum bid rate, the ECB press conference, the euro group meetings, and the German IFO business climate. Now, one thing to note when you're trading the euro is it is not the minimum bid rate that typically causes the most movement. The most movement actually comes during the press conference, okay? Now, on the Japanese yen, you have the Bank of Japan governor speaking, the Bank of Japan outlook report, the Bank of Japan policy rate, the monetary policy statement, Bank of Japan press conference, and the preliminary GDP. Typically, these are the reports that cause volatility on the yen pairs. Now, on the Swiss franc, the Libor rate will cause volatility sometimes, as well as the SNB monetary policy assessment, press conference, and chairman speeches. On the U.S. dollar side, you have the non-farm employment change. This is typically released the first Friday of every month, and it will create typically huge volatility in the currencies, more so than the indices. The only one that would equal that movement would be gold, because gold does move as much as the currencies during this report. You also have the core retail sales, the FOMC rating statement, the Fed chair speaking, the CV consumer confidence, the core durable goods, the CPI and core CPI, the ISM manufacturing PMI, the PPI, the preliminary University of Michigan sentiment, and unemployment claims. Now, this is a big question. Should you use in the money, at the money, or out of the monies if you're trading binary options? Really, there's no simple answer to that. And the reason is it really depends on your risk parameters, number one, but it also depends on how the market is moving. Are you trend trading or are you counter trend trading? And also, You know, typically if you have a slower market, a lot of people will tend to go with the in the money and at the money, okay, because it's a slower market and the chances are it's not going to move very much during that period. You know, this morning was a great example on the U.S. indices. We have had very, very little movement. You know, it would have been a great morning, in my opinion, to use in the money or at the money, okay, because you just don't have a lot of movement. The faster market movements, that's when you want to trade like the out of the money binaries, okay, because that's when you're going to reach that level. There are exceptions. I did one yesterday in the live trading room that we did on the Euro British Pound, and it was a 7-pip move, but we were able to actually enter that binary for only $20 of risk. Why? Because the Euro British Pound does not typically move that much during the U.S. session. And there was a great setup that come off of a higher time frame, and we went out until 3 p.m., set a profit target, and, you know, it hit the profit target. And I think that was a 1 to 3 risk to reward ratio. So this just gives you some kind of ideas as to, you know, these are general parameters, but there's always one that, you know, would potentially be a great trade if you just knew how the currency moved. Now, I do have a website. It's tradershelpdesk.com. We also have a blog, and there's a link on the tradershelpdesk.com to the blog where I have a lot of trading videos. And if you have any questions, you can always contact me at gm@tradershelpdesk.com. Okay? Now, we can go and look at some markets. It is moving extremely slow today, but we'll go and see if we can't spot something. And not sure what we're going to spot here. Let me look for a moment and see if we can see anything. This is what I was talking about with trading the NASDAQ or the Dow this morning. Do you see how it really hasn't moved very much? It's really moving sideways. I think it's probably because the Fed announcement, well, not Fed announcement, but Fed minutes this afternoon. The euro has moved nicely this morning. That's about the only one I know of. Let me go and look at, for example, the Euro British Pound. Okay, I'm just going to bring it up to show you an example. I don't know what the risk is on this. So in this case, okay, you can see this is pretty much at the money because it's the closest 250. But you have one right here that only has $20 of risk, and price is currently trading at 89.86. There's 3.5 hours left on this binary option, okay? So the first thing that I would do is I would go and look at my charts and say, okay, is there a potential for this to actually move up like that? Okay, because that's the question in my mind. Is there a potential for this? When I look at this, the first thing that I notice would be the fact that this is overextended. Okay, so this tells me it's not a trade I would want to take. Do y'all see that? I would have wanted to take it back here when it went to this ATR. Do y'all see that? But would I want to risk $20 right now on a market that is overbought? It's low risk, but would I want to pay that knowing that this market is overextended? No. Do y'all understand that? So even though this is low risk and it looks really interesting, I'm not interested in it because it is overextended. Okay, and you can look to the opposite. Well, if it's overextended, do I want to go short? Well, no, because you can see that price is at 89.84, and my next target is at 89.60. That tells me that's 24 pips. Now, didn't I just tell you that we don't normally move that much? 24 pips? Nah. So in this case, unlike yesterday, this is not a good trade setup. And this is why I say it always matters what the market is doing as to whether you would want to take that trade or not. Okay, on the flip side, would I want to use an in-the-money binary option? Okay, would I want to take this one for $62? No. Why? Again, you're overextended. Okay, that means I wouldn't want to take that one. Okay, would I want to do the 89.80? You know, to me, that would be a more logical choice. Only because this market is overextended. I think it would probably come down. Again, this is probably, okay, could it move 3 pips to the downside before 3 p.m.? Yes, actually has the potential to go down to 89.51, but since it's the Euro British pound, it may be tomorrow before it gets there. Does everybody understand that? You know, if you're looking at the indices, you know, to me, it would be more logical to wait for this to come down to this ATR at 60.59 before I decided to take an entry. You know, right now we're in the middle of nowhere, and we already see that the market is not moving. Okay. I mean, this has moved 20 points. This has moved just over 20 points. You know, and this is since the U.S. Open, which is the strongest opening. You know, I would be more inclined to see if there was maybe an in the money. And again, this is, you know, just looking at the different scenarios that could play out. You don't have any volatility expected in the next 2 hours based on previous action. So my inclination would be to say, okay, I think it's going to stay below, you know, 22,805. But, you know, that's a lot of risk. These are not ones I personally take. Okay. But there's a lot of people that say, okay, I think it will stay below this, so I'm willing to pay that premium because I really believe it will stay below this value. Okay. Does everybody understand that? Now, the other thing is you can say, okay, I think it will be below 22,793. Okay. That would be the at the money where it was when I started highlighting it. Okay. So it really kind of depends on what your risk parameters are. You know, I don't risk, I don't do the in the money. I prefer either at the money or out of the money. Typically, it's out of the money. But again, if you're going to do solely out of the money, then you have to either choose a binary that, you know pretty much the direction that it's probably going to go in, and you're willing to accept that small risk. Okay? Any questions? Are you looking to have the chance to bail out or cash in on a smaller gain? Again, I don't do these in the monies, Marco. Normally, my risk is limited to about 35 because I'm always trying to get either a 1 to 1.5 or 1 to 2 risk to reward ratio. And my typical profit targets, I'll tell you right off the bat, if I go in long, I immediately set a target at 80. If I go short, I immediately set my target at 20. Now, can I change that because I don't like something that's happening on my chart? Yeah, that's part of your job as a trader, Most of the time, I'm not, I don't set my trades in and leave them. I actually monitor them. I am at my desk monitoring my trades. But remember, I used to trade futures in Forex, and we didn't have limited risk scenarios, okay? You could always put in a stop, and, quite a few times it jumped stops. So, I was trained to always keep track of my trade, and I still do pretty much. Yes, I have all kinds of alerts in multi-charts and TradeStation. And this is what, to me, it makes trading easier, I guess is the word I'm looking for, because this scanner window sends me an alert when price is at an ATR, when it's at a congestion dot. If I'm oversold, like right now on the USD Swiss franc, you're oversold. I've got volume divergence here. And, if for some reason I get volume divergence and I'm overbought or oversold, it's popping off alerts at me, And that's one reason I can keep up with all of the currencies I trade. The other reason is, this window actually shows me everything that's going in. And notice we don't have anything that's overextended. And that tells me I got to trend trade. There's nothing that's overextended, so I have to trend trade. Okay. What does that mean to me? That means, okay, if the Aussie dollar is moving up, okay, then the only potentials that I have is to enter at the ATR going in the direction. So this would be a long position to the upside. It's just very simple. And Stephen, I totally agree with you. One of the things that I really harp on a lot, and everybody gets tired of hearing me say it, is your risk to reward. Everybody wants to be the world's greatest trader when they're coming into trading. They want to get 80 and 85% winning ratios. I've realized a long time ago I wasn't going to be the world's greatest, but I could still make money because I make my numbers work for me. Okay. And that means, hey, I can be a 50% winner as long as my risk to reward ratio is right. Okay. If I hit 60%, hey, I'm good because my risk to reward works for me. Does everybody understand that? I think it's one of the most important things you can actually do as a trader. And, you know, when you're trying to get these huge winning ratios, you know, 85, 90%, you're putting a lot of pressure on yourself as a new trader. And then what happens? You don't meet it, and then you feel like a failure. And then your trading just gets worse from there. You know, instead say, hey, I'm a new trader. I'm not going to be able to hit those high percentages. So how can I make it work for me? And that's actually when I changed my trading entirely. When I admitted, okay, I can't achieve those high numbers. So what can I do? Well, start looking at risk to reward. Any other questions this morning, guys? Okay, if there's no other questions, I do appreciate you joining me this morning. I hope you enjoyed the webinar. I would like to remind everybody that I believe it's next Wednesday. We're actually going to be trading Aussie market report. I believe it's scheduled for 8 p.m. They do send out a copy of the recording, Phyllis. All right. Thank everyone for joining me, and I hope you have a wonderful day.